Good morning to Saxo Bank's morning call on Wednesday, the 10th of October. Not much is going on in markets. We had a quite quiet session yesterday, not big movements in currencies. We had a pause in the interest rates, rise in the US, and equity markets are quite flat this morning in the equity futures market. So we're taking the opportunity today, Steen and I, to go into the helicopter and look at the broader trend, talk a bit about the midterm elections, but also some of the broader trends in the equity market. But if we start with you, Steen, as we're getting closer to this midterm election in the US, getting excited or what?
Yeah, we should really be excited. This is a big political event, but as the first slide is showing, it seems like if we ask in the pollsters, the race is already over. So basically, what you look at here in the left-hand side is the race for the Senate. The blue being the Democrats, the red being the GOP party. So basically, what the polls are saying that there are less than 20% probability that there will be a sweep of the Democrats into the Senate. And on the other side, if you put the chart back up, we will see in Congress we have similar odds, 20% for the GOP to doing. So basically what we're seeing here is a setup where the market is thinking that we already know what's going to happen. It's going to be bipolar sort of in what happens. But I have a point, and I think it's quite an important point, which I will show in the second chart. Don't forget when we were at this time ahead of the U.S. election with Trump and with the Brexit, it was also pretty clear in the polls what would happen. And I think this second chart shows really what's going on. And here it is, a CNN poll that looks at the Democratic Party candidates and Republican candidates. Not unusual. It's pretty much like for like vote on the overall vote. But watch the women on the far right with the red circle. 63% of the women will vote for Democratic Party. Yeah. I really think there is a massive, and I mean a massive pushback from this Kavanaugh hearing, which SNL, the comedy show in the U.S., said was a real big win for any white male above 60 years of age. And that's probably true to some extent. Of course, it's the caricature of it, but I really think that the women will come out in forces. It was also one of our themes in our rate prediction. Mind you, it was to be more CEOs. Yeah. But I still think it could be the year of the women in a sense. I think they will come out. And I don't actually think campaign money, which is flowing to the GOP party, and that's the second part of the chart if we show it again. What is also interesting at the same time, Trump is coming out smiling from this. His approval index is -1. That may sound negative, but he comes all the way from -12, -10 in the early summer. So he's anti-China, he's sort of white male appeal and the middle of America sort of appeal he has is very, very strong. But I think what we are not discounting probably is really the women votes. So I'm close to doing a call that the Senate is actually more like a 50-50 race than a 1 in 5 possibility. And that, of course, will be a surprise to the market.
What do you think could happen if let's say, the Democrats sweep the whole Congress, they take the House, they take the Senate, then what? What would that mean for Trump, U.S. politics, and maybe even for markets?
Then I think we're in for a very tough ride because he's already seeing the anti-China rhetoric as his strong sort of calling cards to the voters, his connection with the voters. If you do lose the House, you lose the ability to operate the domestic agenda in the U.S. Don't forget the White House, being the president, you really have very little sway over the domestic policy like fiscal expansion because you really have to go to the Congress and to Senate to get it approved through. But you have huge latitude in terms of the foreign policy. And that's where the major change is going to come. The day after this midterm is over, he's going to go to the election campaign. And that election campaign will have one theme only, anti-China, taking America back, America first. So I think that will create additional volatility. It could probably happen without that happening, with the consensus coming to fruition. But I'm really concerned if he loses, because then the rhetoric will be more aggressive.
Yeah. Do you think the Democrats will continue the stance against China at the current trajectory, or would they loosen up a little bit against China, being a little bit more consensus?
That's really the problem. I think. I don't think the Democrat is an elegant or a forceful opponent to Trump and the GOP party. But I think, don't forget, Trump didn't win the election. It was Mrs. Clinton who lost it, having no ability. And similarly, I think the yes side in the Brexit could not win it because there was such an uprising against it. I think the women rising is similar in trend. It may be too late in the race, but I'm really excited to see that women are registering across the U.S. and potentially creating some valid noise into the U.S. midterm election.
All right, interesting. Talking about a comeback, maybe for women here in the election. I've also talking about a comeback in my Q4 outlook, and that's a comeback for value stocks. I brought you with this chart, which I think is very fascinating. If you look at across a period of 3 to 4 decades, you have observed in markets this continuous premium you get by investing in value stocks, so stocks that are quite cheap relative to cash flow versus paying a lot for growth. And what we have seen since the great financial crisis, we had a small blip during the .com, but that is a premium towards growth. And the thesis I put forward in the Q4 outlook is basically that the low interest rates have caused this yield chasing, but also almost an infinite valuation on future cash flows. So obviously growth stock momentum would do well. But what I'm saying right now is that what distinguishes value from growth is that value have a bigger portion of their current value in just immediate cash flows coming within the next 5 years, where growth is long into the future. And when the discount rate, the price of money goes up, a larger part of the value of these growth stocks will have to come down simply because of the mathematics of it.
I would say, as a macro guy, this is ironic that growth stock is doing well in an environment of low growth, but of course, behind that is the financial engineering part. The financial engineering is interest rate, and interest rate is the cost of capital is going up, so it makes perfect sense, actually.
Exactly, and so I really believe that value will come back.
But also, strongly. I mean, isn't it also the fact that we've seen already in the FX space that countries that run large deficit in a shrinking pool of capital are hurting. This morning, Indonesian rupiah again made a new low. Indonesian IDI made a 70-year low the other day, and similar Turkey, blah, blah, goes on. So it seems to me that countries with a huge deficit are getting penalized. It seems like, and that's what I guess you were saying, is also balance sheet with very high leverage is also going to be paying a premium in terms of reduction in stock price.
I think the easiest way to view value versus growth stock is actually that a growth stock is a higher duration instrument versus, because you paying for something way into the future compared to a value stock, and when rates rises, then you don't want to have a long duration instrument. So I think that's really the simple way. But there are other interesting things happening in the market. We have been talking a lot about China. It seems to be stabilizing a little bit here in the past 2 sessions. But from a longer term perspective, if you look at this chart here, you can see Chinese equities for many years traded at a valuation premium to US equities. And that made sense because you had higher growth in China. There was a more interesting growth story to be made. You had the rise of Chinese technology, Tencent, Baidu, Alibaba, etc. And what we have observed in 2018 is actually a complete collapse. So now we're observing a discount, and that I think is a discount both to the political scene, the trade war escalation, but also that we're seeing outright profit squeeze right now in a lot of the sectors in Chinese equities. But I think that as we presented the other day, U.S. equities are extremely expensive. I think you have to be on this call and be long Chinese equities and maybe even short U.S. equities. That's my view. I think you have to play China on the long run here.
What do you think will be the catalyst for releasing this further intervention by the Chinese monetary authorities in terms of easier policy?
Yeah, I still think that I think they have less ammunition than they had in the previous 2 stimulus cycles we've had since the great financial crisis. But I still think they have more ammunition than most people think. I think we're underestimating China's ability to manage their economy. But as I said yesterday on the call when John Hardy was also here, it's very difficult to gauge what the headwind versus tailwind here. But I would not be surprised we get an escalation of the trade war. We'll probably take another leg down in Chinese equities, and we will sort of flush all the skeptics, and then I think it will be a great margin.
Talk about intervention. I think you have a final interesting chart.
Yeah, and it's again about China. Over the past years, the Chinese market has become almost a cartel in lithium mining. Lithium is very important for rechargeable lithium-ion batteries, which are used in electrical vehicles and computers, etc. And what you can see here on the chart in the lower left hand corner, you can see lithium prices are down almost 30%. So you're seeing a collapse in prices, which is interesting because it coincides with the Chinese government and colluding with the private industry in China to actually creating a cartel in lithium prices. And as you said before we went into the show, typically from a macro point of view, if you have a cartel, you would expect prices to go up. And
yeah, I have to admit I was very confused by prices going down when you had a cartel, but it makes perfect sense. They're really trying to control the input cost to the process, which fits the overall pattern in China of trying to reduce the friction and the cost and going towards this independence, both in the mining sector, but also all the way through the technology sector, which is now, what we have effectively a cold war of technology.
They want to be basically the leader in electric vehicles.
And independent of everybody else.
Exactly. But if you go back to the chart, there's actually something interesting. It's a breakdown. It's courtesy of Barclays. So the upper hand right corner, you can see two pie charts, and the pie chart to the left is actually the cost breakdown of an electrical vehicle. And you can see batteries around 60%. I was just playing with the number. So if you assume that an electric vehicle manufacturer like Tesla, for instance, is having a 25% gross margin right now, and you assume the 30% decline from now in lithium, and you said that all of battery was only lithium cost, which is an exaggeration. It's not the case. But if that was the case, then the gross margin would actually expand by more than 10 percentage points.
10 to 12% of it.
So that's a lot. So I think this is probably something.
But it's not just a Tesla story. It also makes a whole story about electric vehicles driven again by China's 2020, 2025 goal of replacing all of the combustion engines. Very interesting.
Exactly. All right. Very light calendar today, but we have to talk about it. I think from an inflation point of view, we'll have the CPI from US tomorrow. But we have the PPI core for September expected to climb a little bit for September. Then we have that 3-year note auction, as John mentioned yesterday, 36 billion. It's coming out at 15:30 GMT. Watch that; it could have implications for rates. But then also, Steen, you mentioned this EU Barnier.
Yeah, so EU Barnier, of course, being the chief negotiator for the EU, and today he's going to go in front of all of the EU ambassadors and all of the commissioners, and he will outline the plan for how things are. So basically, today we get the blueprint for how the EU sees the deal with the UK. And that will have some impact on sterling if it's not what the British has been portraying, which of course is a very optimistic view. John has mentioned over the last couple of morning calls that Canada deal is what is in there. So look for mentioning of Canada-like deal in that, but also look out for potential swings in sterling around the announcement.
All right. I think that concludes today's morning call, and we'll be back tomorrow at the same time and place. Thank you.